Hello, dear traders. This is Alex Gerchik, and today we're going to talk about indicators. Today we're going to talk about the indicators, what to have, what's supposed to be on the screen, what will it help you with, or it will not. Will it bother you, or you can make money with it? I tell you honestly, I've been in the business since 1998 as a trader, and from 1996 I've been working for the brokerage firm. So next year it will be 20 years that I trade. I came to the proprietary trading firm and got the money from the firm practically right away. I started with very small amount of money with the $400, and in less than a year I had $500,000, and within less than 2 years I had almost $10 million. Under management to trade. Since you work for the proprietary company, if you trade well, the company would provide you with the capital. So in a few years, I trade over almost $10 million and made money for myself and for my company. So where should I begin? When I started trading, obviously, it was not that many books about it. And after that, in 2000s, when the trading became very popular and a lot of people made money in trading, everybody started to write books about the day trading, about the indicators, about technical analysis and everything else. It's been a very expensive and heavy books like John Murphy, his book 7th edition with technical charts, like almost 700 pages. And I started to figure it out. I mean, what's there I can learn? And I tell you honestly, I didn't read any single book till the end. Just couldn't do it. And the way I trade, I practically use no indicators. There's a bunch of different indicators. Is RSI index, is alligators, oscillators. I mean, it's a bunch of them. And a lot of times Fibonacci levels, and a lot of times the people who trade, they use that levels or that indicators to help them out to trade. Most likely, most of the time, it will not, for one simple reason. It's been already proven. All the indicators that exist, except one, ATR, average through range, this is the lagging indicators. There's indicators that split it into two different levels: the leading indicator and the lagging indicator. Lagging indicator is everything that's followed after the price, and the leading indicator is the price. So just for you to understand, no matter what you tell me, as I said, I've been in business for 20 years. I've seen everything, all the charts and everything else. The only indicator is the price. And if you really understand and you know how to read the market, or the patterns or anything else, that will help you out. Otherwise, if you just gonna use the indicators in your trading, I pretty much can guarantee you most of the time you're not gonna make any money. What I have in my screen usually, it's just SMAs, moving averages. I have simple moving averages, but what I wanted to show you today is the few of things that I use. I most of the time trade false breakout. So for me, the most important thing, the stock has to have energy. I trade and I teach a totally different way. The way I trade and the way I teach, it's for the people to understand the market. So the person should understand where the move is coming from. Not to use any indicators, but just to understand why the stock will end his moves, where is the good entrance point. Because a lot of times, for you to understand, before a big large move, stock would not give you a chance to get in, but a lot of times the stock would give you a chance. A lot of times people asking about the patterns. The patterns is totally different. There's a lot of books about the patterns, Japanese candles and everything else, and the people using it. Obviously, there's something is there, but the most important thing, why, for example, people come and learn from me, because I can explain beginning of the move, end of the move, and the most important thing, how the move has been created. So for you to understand the chart, it's not only about the pattern or about the technical analysis. It's to understand what's going on in the market. If somebody saw our webinar yesterday, there was a few stocks that I said about it, and you can take a look at the webinar from yesterday, from the March 13th, about the regular Monday technical analysis of the stocks. I will show you a few stocks today, and I will show you what they did. Yesterday, you know, I show you a few stocks, and some stocks, one stock went down 20% today, another stock went down almost 40% today. And I said it before, I mean, I said it yesterday, even before the stock started to move, and they even showed the rebound, but obviously they did not rebound, they went down. So I will show right now what I use, how I treat the market, and what's my system. That's a stock we talked about yesterday. The name of the company, it's Valent Pharmaceuticals, VRX. I showed this particular stock yesterday. Take a look, as I said before. You can take a look my analysis. It was yesterday, way before the stock started to move. I said one thing for a fact. After the big drop down, we're going to talk about each particular case scenario. After a big drop down, a lot of times, obviously, there is a short covering. Most of the time, if you don't see heavy short covering, that's most of the time there is a big seller in the stock who's basically continuing to drop in the stock more down. So if you take a look, the stock dropped, let's say, from just September till today, when it went down almost 65%, you know, with a few rebounds. But the most important thing, why, if you take a look why the stock is going down and why there's a big seller, every time after the big rebound, you see, the stock cannot break high. So the most important thing for the rebound, that the stock has to break some kind of levels. But if you're going to take a look, there's a first level, there's a second level, and there's the third level, and the stock just couldn't break the higher. It means there is a sitting, a big seller who's putting the stock down. Yesterday, when I see this picture, I said it right away. The most likely the stock is going to go down because, for one simple reason, every time the big seller needs to accumulate the position, he can accumulate only position towards if somebody is going to start buying it. So if the people are buying it, he is a seller. So you know what he's trying to do? He's trying to look for the stock more attractive. So this way, some people will buy it in the market, and he's going to be the one who's going to sell. So in this particular case scenario, every time, after a big drop down, you see some kind of pullbacks, like in this case scenario, you can figure it out right away that most likely it's going to be dropped down. So yesterday, and as I said before, this is everything before it happened. You can take a look at our webinar from yesterday. So I said right away, the VRX is going to pull down, and the most important thing, as I said it before, yesterday we talked about VRX stock and MDT stock. You see, we figure it out, you know, who's buying, who's selling, where's the buyers, where's the sellers of the stock. So that's what we try to figure it out. So very important thing about this particular stock, as I said before, it couldn't basically have a return. So what does it mean? There is a big seller who is pushing the stock down. And what we have today, as you can see, the stock closed yesterday at a little bit above $12 a share and went today to almost 10.45. So we had a move of $1.50. It's about 15%. There's another stock that I was talking about yesterday, ADPT, Adaptus Health. Very important thing about this particular stock is you take a look before, right before the stock went down, like I'm showing to you right now, right before the stock went down today, stock tried to rebound. So what's going on? Take a look. This is a very good case scenario where you see no rebounds, no rebound. Take a look. We went down from 40. Take a look. We're sitting straight. We're not coming back. It means nobody's covering the shorts because there's a big seller sitting and pushing the stock down. He has a plenty of the position. Then after the big gap, we continue to go down. Yesterday, we had a day, take a look, where the stock wanted to show you it's rebounding. You see it's went a little bit higher, and I said right away, that's it. This is a sign in this particular case scenario that the stock is going to go lower. So what do we have today? Take a look. We closed yesterday at 230. We opened today at $1.80, and the low for the stock was $1.50. So we went down from 230 to $1.50. It's almost 80 cents. In this case scenario, is almost 30%. Actually, it's more than that. It's almost 40%. So we have a drop down. So we really could identify. And as I said before, I'm telling you this right before it happened, not after it happened. Another stock that we also discussed before, CALA. Most of the time, the end of the move, it's finishing with a false breakout. Take a look what's going on. I mean, if I show you today, very small falls. You see, we went up, just opening with a little slight gap, went a little bit higher, took all the stops out, and then basically pull back. Take a look. That's what it is. What we have right now is, take a look. We see in the 5-minute chart, we're building a very large level. I just want to show it to you something so you'll understand. If we're going to talk about patterns, I'll show you right now. Take a look, my dear friends. I just did a paint, so I'm going to save this picture as the super level. 5 minutes, super уровень, super, I'm writing in Russian. But what I want to show to you, how the strong is the level, and this is one of the really opportunity you can use. So we're gonna simply take a look. Take a look. Okay. Low, 1335. I'm sorry, 1325. Low, 1325. Low, 1325. Low, 1325. Take a look. 1, 2, 3, 4, 5. 5 bars in 5 minutes using basically trading at the penny for penny. Very important thing. Penny for penny. Here at this kind of level, you can really use a very small stop of 3 or 4 cents. And easily make right here 40-50 cents. So it's very important thing to figure it out what's going to be in the stock. But the very important thing is I want to show it to you. See, we open higher, just slightly higher, to take all the stops, because you know one thing for a fact: when the stock is closing at the high, there's some people definitely short in the stock. I mean, if we're going to take a look and figure it out what to do, take a look. The stock went up from $3 a share to $14.50 a share with no stops. Definitely, it's no stops on the stock. So it's 5 times. From 3 to 15, it's almost 5 times, 500%. Then what do you see? A lot of times people, they try to identify high and low side of the day just to put the stops there. So most likely, if somebody is shorting because the stock is not really closing at the high, just a pullback from the high, there's a lot of people putting the stop. So for the big seller, to basically open the stock higher and then take the stock lower, it's not a big deal. So he can basically easily open the stock just a little higher with a market order and then take everything down. So what he did, take a look. Just I want to show it to you. High of this bar, 1475, and the opening is 1480. So a lot of people put in the stop just right above for one simple reason, because the previous history shows it was nobody there. Take a look. It was nobody there. So everybody is going to put the stops at the same level, right above the level. It's a very important thing to figure it out. Most of the time, all the moves, they begin and they end with a false breakout for one simple reason. It's somebody always have to shake out before breakout. I mean, there is an old saying in trading, there's a shakeout before breakout. So most of the time, they're going to shake you out basically before they're going to do something. In this particular case scenario, as I said before, we have to figure it out what's going to be after that. But take a look, the most important thing, how actually he did it. You know, the beautiful part about the trading false breakouts, it's very easy to identify it because he's going to show it to you, and it's very simple to figure out the way to enter. Take a look at another stock. You see, he couldn't break it. You know, I showed this stock, this particular stock yesterday as well. You see, he shows that he's trying to break out. Look at this. He took the stock higher, you see, but the most important thing after that, take a look. Couldn't figure it out, any moves, and he took the stock lower. If you're going to take a look at my charts, I only have 50 right here and 200-day moving averages. A lot of times people asking me the way I use them in a system. It's not really like a part of the system. I just look at them for identifying the level. So for example, a lot of times moving averages, basically they serve you the level of the support and resistance. So it's very, very beautiful part to identify them as for example, if the stock right here, I mean, I understand this is after that, but take a look. You see, We hit it right here, 200-day moving average, right here. And every time, very important thing to figure it out, it's how the stock is closing against the 200-day or 50-day moving averages. Is very important. Just for you to understand, hold on. Just for you to understand, a lot of big guys like the hedge funds or anybody beautiful chartists who's really understand technical analysis, they put in always on charts moving averages. They always figure it out. The moving average would really help you out. So in order to identify the system, as I said before, in my trading system, I don't use any indicators. My indicator is how the stock behave. So the very important thing, I'll tell you why. A lot of times people using some kind of pattern. The pattern has one problem, and we already figure it out. You know, I had a very large team of the guys who trade algorithmic trading, and we basically done a lot of job about putting a lot of patterns in algorithmic trading. And what I figured out one very simple thing. The patterns, they have a very short life. At one point, if you don't understand the market and you try just to trade a pattern, like for example, 3 bars together or 4 bars together, you're not going to make money for one simple reason. The pattern is going to die. But the way I teach you guys, and as you see, if you understand the market, for example, if you understand the buyer and the seller and who's trying to win, then it's going to be much easier for you to trade. So a lot of times people asking me a question, how to learn. It's very simple. You just always close the right side of the chart. Like I did yesterday, I didn't know that it's going to be a big drop down in 2 stocks that I showed to you. And you take out the right side and you basically analyze in the parts that you understand. Just the beautiful part about trading, if you don't understand, you don't trade. You only trade the parts that you understand. So for example, you close the right part of the chart and try to understand what will be with the chart. So you go by bar, position by position, situation by situation, and you will try to understand what really is going on. A lot of times the traders, you know, lately I see a lot of beautiful part. Will teach you very easy how to make money. A lot of students are making money. Guys, they teach thousands of people, and there's a handful guys who really makes money, and they show these guys and they show to you they really make money. No, in this case scenario, if you really want to become a trader, you don't trade pattern, you trade the market. You understand the market because you understand one thing. When you understand the market, you have no competition because there's one thing you understand is how the market behave. That's a very important thing. If you understand how the market behave, then you understand what's going to be. If you understand it's going to be a false breakout, you have to explain yourself why. For example, I always take a look. I always have a list of the stock. I always have a list of the stock and moves, you see, and the prices. And the most important thing, it's a direction. If you understand the direction of the stock, you are 90% there. So very important thing is to understand the direction of the stock. Once you understand the direction of the stock and how the stock behave, you can really trade. You don't need indicators, you don't need oscillators, alligators, or anything else. You know, those people who is basically selling this as a tool know as well that you cannot make money there. So you can make money by understanding the market. As I said, watch my videos, you see they're all for free. I'm not selling anything to you, but understand the market. And you know, every time I'm going to explain about the particular stock, you'll understand why I choose that particular stock. And the very important thing, take a look at the video from yesterday where I particularly explained why the stock is going to go down, and I really explained. So watch the video from yesterday for March 13th analysis of the stock market, and you'll understand that I really know what I'm talking about. Thank you very much. All the best. And you have to have, obviously, a crystal ball. Thank you. It's been Alexander Gerchik. Thank you.